Asia's factories squeezed by better costs. Susceptible call for Tokyo. Asia's factories struggled for momentum in July as China's strict COVID regulations and flagging global call for slowed manufacturing, despite the fact that early symptoms red-hot inflation can be peaking supplied a few optimism for corporations squeezed by using prices. A series of Purchasing Managers' Indexes (PMI) for July launched on Monday confirmed new orders falling within the area's production powerhouses, mainly tech giants in Northeast Asia. South Korea's manufacturing facility Hobby fell for the primary time in almost years even as Japan saw its slowest increase in interest in 10 months amid continual delivery chain disruptions. Activity growth in China also slowed, the personal quarter Caixin PMI showed on Monday, notwithstanding a few easing of the strict domestic COVID-19 curbs that slammed the sector's second large street economic system in the 2D zone. The Caixin PMI accompanied an even bleaker reading from the authorities' reputable PMI launched on Sunday, that showed pastime suddenly falling in July amid sparkling COVID-19 outbreaks. The PMIs for Asia's largest manufacturing economies highlighted the battle for factories in those countries in managing the dual pressures of higher upstream costs and weakening demand, specifically from China. Higher prices for inputs inclusive of gasoline, metals and semiconductors meant that the disruption became broad-based throughout the South Korean production zone. Usama Badi, economist at S&P Global (NYSE) SPGI Market Intelligence, stated of South Korea's PMI. That stated, the fee of enterprise inflation eased to a 4-month low in a tentative sign that rate pressures had peaked, despite the fact that value inflation remained nicely above the long-term common. Adding to that gloom, the PMI for Taiwan, a semiconductor production powerhouse, showed manufacturing unit interest falling at its sharpest tempo because May 2020. Silver lining? A surge in international commodity prices amid delivery chain disruptions resulting from the pandemic and the Ukraine war has challenged companies and policymakers global, with central banks rushing to tighten economic policy and firms cutting charges. There became a few high-quality news for the location, however, with PMIs indicating input charge increase has moderated in China, Taiwan, India and South Korea. Conditions in parts of Southeast Asia were additionally upbeat, with PMIs pointing to accelerating activity in Indonesia, Malaysia and Thailand where new orders boom bucked declines seen elsewhere inside the vicinity. India's manufacturing unit interest multiplied at its fastest pace in 8 months in July, additionally helped by way of solid boom in new orders and output and a signal the South Asian economy stays resilient. South Korea's exports grew at a faster annual pace in July as strong demand from the United States offset vulnerable income to China, separate alternate information confirmed on Monday. Asia's readings come in advance of factory surveys due out of the United Kingdom, Euro area and United States later within the day, that are expected to reveal similarly mixed situations inside the global's primary industrialized economies.